to action.
Hi guys, I'm Aboki here. Welcome to another module of this Forex trading course. Okay, in this module we're going to be talking about identifying liquidity zones, talking about point of interest, area of interest. We're going to be talking about various PD arrays, the order blocks, the liquidity voids, the fair value gaps, the breakers, the mitigation blocks. I'm also going to be showing you how to refine your entries. Also premium, discount, price levels. I'm going to be showing that, and also we'll end it with buy and sell models. Okay, that's all what we're going to be having in this module in this Forex trading course. So without further delay, let's start with identifying liquidity zones. All right, so talking about liquidity zones. Now, first of all, we need to understand the term liquidity. Liquidity in the financial term actually means, in simple terms, means money. Anywhere money is, it's called liquidity. So now we should refer that to the charts. Okay, identifying liquidity zones simply means trying to understand and trying to find where the BFIs, the banks and financial institutions, are putting in the large funds in. If you can identify those zones, okay, you'll be able to ride with them. Now, so no matter the amount of money you have, you can't actually trade against the BFIs. You can only trade alongside with them. So knowing where they actually keep their large funds, knowing where they are placing their orders, their buy orders and their sell orders, will actually help you, So if you can understand where they're actually keeping their orders, you don't have to trade against them. You just have to trade with them. All right, so you won't have much tension when you're entering a trade because you're relaxed and you know that, there's enough liquidity here and it's going to help my analysis. All right, now, how do you identify these zones on the charts? Now, let's head here. Let me show you how it's done. Okay, now, something about liquidity is that it lies in various aspects of the charts. Some people complicate it with liquidity pool. A liquidity pool is different from those liquidities on its own. Or a liquidity pool is when the BFIs actually take out the stop losses of little retailers, of retail traders. You and me, we are all retail traders. Right? It is when they take out their stop losses. Okay, knowing when and where they want to take out the stop losses, having that knowledge alone will guide you in trading the Forex market. Okay, so now there are two things here now. They are identifying liquidity points, identifying liquidity zones, and identifying liquidity pools. All right, there's a difference. Now, take this. Anywhere on your chart where you find a double top or a double bottom or an equal high or an equal low, all right, that area, like this one right that I have here, is an area of liquidity, meaning the BFIs know that there is a lot of orders that are accumulated on that region. So they will try their best to take out the stop losses of those traders that have theirs there. So, first of all, anywhere you find equal highs and equal lows in the market, try to lay your hands on them. Just mark it out with your trend line tool. Just mark it out. It's an area of liquidity. All right, mark it out as an area of liquidity and label it. Label it equal high. Okay, equal highs. All right, meaning that price, the BFIs will always drive price to come back and take the stop losses over here before driving price wherever they want it to go. All right, now liquidity zones. Where are liquidity zones? Now, if you understand what I'm trying to say now, every major previous high and previous low is an area of liquidity. Not really everything, but every major previous high and previous low is an area of liquidity. Now, having an entry in the market is one thing, but having an exit is also a very important aspect of trading. Okay, now identifying liquidity zones will help you have a target trading the forex market. Okay, when you have an entry, you know where to place your stop loss. Okay, knowing where to place your take profit is another thing. So what I normally do is that I mark out those area of liquidity, and that is where I trade towards. That is where my take profit will be. Because why? Because I am certain that market, the BFIs will always drive price to area of liquidity. They will always drive price to liquidity zones. Now, I talked about shift in market structure recently. Okay, now if I had taken that trade from that region where I marked out the SMS, as you can see here on my chart. Let's say I took this trade from this SMS area where I marked out. Okay, now where will I be placing my take profit? Okay, if I open my long position, maybe I started taking the trade here. All right, I'm putting my stop loss at the previous swing. All right, putting my stop loss at the previous swing. Nothing less than 30 pips. Remember, I don't do trades less than 30 pips, so let's just say 30 pips. Okay, now first of all, I know that this is an area of liquidity here. I already marked it out, equal highs. That's a liquidity zone already. First thing first, I'll put my take profit there. Meaning I'm riding this trade right from the very start down to that region. So liquidity zones give you a place to put your targets, because you know that, yeah, the BFIs are driving price there, so why not just follow them and drive it along? All right, so it gives you a chance to put your take profit if you can identify where they are. Okay, now one more thing. Remember I said liquidity zones are also major highs and major lows. Okay, now let's go on the daily time frame. Now it is also very important for you to start your analysis on a higher time frame to a lower time frame. Okay, let me take this off my charts. Okay. It's also very important you start your analysis. It's called a top-down analysis. All right, so starting your analysis from a higher time frame to a lower time frame. Why? Because the higher time frame holds more credibility than the lower time frame. The lower time frame is also full of noise, yeah, but you can also pick up key things, points on the lower time frame, but on higher time frame they just hold more credibilities. All right, if on a higher time frame I am looking at shorting the dollar, okay, and on the 15-minute lower time frame I'm looking at longs on the dollar, I will know that, yeah, the longs on the dollar are short term, and maybe they are just possibly retracements, okay, whereby the bearish move on the dollar is the major move. All right, so anything on the lower time frame might be just maybe any opposite any other bias I might have on the lower time frame might just be temporarily. All right, so remember I said every major high and every major low is an area of liquidity on the chart. Okay, let's go to Euro GBP. Excuse me. Let's go to Euro GBP. Okay. Let's go to Euro GBP. Okay, remember I said every previous high and previous low are points of liquidity on the market. All right. Now let's take, for example, this guy here. Let's say all this have not happened. Let me put my replay function here. Okay. Now I'm in this market. Okay. I marked out this area of liquidity. This is the next major low. Okay. This is another next major low. Okay. Now I want to, let's say I have an entry on this point here. Let's say I had an entry on this point here. Where will I be putting my target? I'll put my target here, right here, and right here. Okay, maybe after it has taken this out, I take profit and I allow it to rest. Okay, now this is the next area where I know that market, the price will go. Okay, now let's see how it goes. Okay, it's going, still ranging. Remember, it gives you a target in the market. Okay, price has cleared the first liquidity, gives you a target. Remember, it's heading for the second one. Good. As you can see, it's heading for the second one. This is how it plays. This is how, if you can actually be patient in the forex market, as you can see, it has taken out the first liquidity. Okay, now let's say one way or the other, remember it has taken this liquidity, I can take it out on my chart. Let's say one way or the other now, okay, I had a reason to buy this pair. Okay, let's say I have a reason to buy this pair. Okay, where are my next liquidity points? The previous major highs and major lows are my liquidity zones. Okay, I have this one here as a liquidity zone. I have this one here. This is another high. If you minimize, if you go to a lower time frame, this is another high. All right. Now, this is another high. Okay, these are liquidity zones, and this is another high. The liquidity zone. One more. And this is another high on the liquidity zone. Okay, now let's say I had a reason to long this pair. Okay, see, it has cleared the first area of liquidity already. Let's see what happens. Let's see if it goes to clear the second one. It has also created an area of liquidity here. But let's see what happens. It has taken the first area of liquidity to definitely come and clear the second one, which is now here. Good. You see how it clears that area of liquidity? It has cleared the second one, cleared the third one, cleared the fourth one and fifth one. You see, just knowing, like I said, just knowing where the BFIs are driving price to is a very important aspect of trading. And I'm sure this little representation I've given you will help you identify other liquidity zones on the market. Okay?